Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, the Australian dollar has continued to gain momentum since posting a bullish candlestick hammer, as you can see here outlined from the bottom of its range. It is assessed that market, as it progresses higher, should fail, and with the recent up test around 70, 60, 70, the market has actually turned back down this morning and now poses a threat, with the midway point still holding for the RSI, and also the MACD is still holding to a negative sentiment. Does give further pressure to the downside and look towards 70.10, with a yearly objective holding at 69.40.60. Looking ahead, we do have the release of Chinese manufacturing PMI for April, which is forecasted at 50.7 with a previous reading of 50.5, and the non-manufacturing PMI seen at 55.0 versus the previous of 54.8. Then on Thursday, we have the Cajun manufacturing PMI, which is expected to bounce from 50.8 to 51 in April. Trading from the short side, placing stop losses accordingly to your risk management. I would say above 71 cents. I believe anywhere from 70.60 to 71 cents is a sell zone, and any squeezes should fail and keep the bearish sentiment in play. Well, the outside range day for the bulls on the euro is progressed further for another day, but not giving confirmation as of yet to support the signal. If we see a break above 111.95, then this could be enough to support a squeeze up towards 112.55.65. But I feel, in terms of this candlestick, it's not the strongest of outside range days. And also you can see here the RSI is struggling at the midway point. I view towards 112 or 112.65 as a sell zone, and I expect to see supply to come back into play and therefore see a move away from this region here and plummet back towards the target I'm holding at the moment at 110.70. The dollar yen hasn't staged any significant moves, and as you can see, it's still engulfed in this candle, which could be holding to the bear case. I do believe that from this pattern, it is a likelihood that is to see the market fall further. I'm holding the move to 111.40 to 110.70.80. Any advances should fail towards 112.20.45. Looking to the pound, the market is still holding in this downward trend, with the market recently breaking 129.70 does give me a measured move to 125.5. Any advances should fail towards this top side of the range and be capped roughly around 129.70.90, with a downside immediate target of 128.85. The gold disappointingly has fallen since the recent challenge, up at 1,288, and from that rejection now puts a little bit of risk on the downside. I do expect to see possibly a move towards 81 to 75 to 77, with any advances still to be capped at 88. We need to clear that level to reinstate the upside to at least 1,300 to 1,320, while 88's capping still keeps the risk of a potential slide, and therefore could still see the zone around 65 to 75 as a buy. Finishing up with oil, well, since the market plummeted 3.5%, either on the back of President Trump refusing to allow any more sanction waivers on Iran oil, or was it the General Electric Baker Hughes Energy Services reporting that the US rigs drilling fell to a 13-month low? Either way, the market did plummet 3.5%. Therefore, I do expect to see further weakness down towards 61 to maybe $60 a barrel, and the cap now seen at 64, 65, 85. Well, that wraps up for today. Thank you very much for joining me, and as always, look out for the intraday report. I hope you enjoy the great start to this wonderful day.